Good morning, ladies and gentlemen. Welcome to the IRB Infrastructure Developers Conference Call for discussing the financial results for the quarter ended December 31st, 2024, along with the recent developments. We have with us on the call today Mr. Virendra Maisikar, Mr. S.S. Rana, Mr. Anil Yadav, Mr. Mehul Patel, Ms. Poonam Nishal, and Mr. Tushar Kaveria. As a reminder, all participant line will be in listen-only mode, and after the opening remark by the management, there will be a question and answer session. Please note that the duration of the call would be 45 minutes, and any queries left unanswered after the call can be subsequently mailed to the management for adequate response and resolution. Please note that this conference is being recorded. I now hand the conference over to Mr. Yadav to give you an overview of the significant developments during the quarter. Thank you, and over to you, sir.
Thank you. Good morning, everyone. I welcome all the investor and analysts to our earnings call for Q3 result financial year 2024-25. I trust you have reviewed our detailed number and presentation. I will briefly highlight the key point for the quarter. Private InvIT, IRB Infrastructure Trust, has issued preliminary and non-binding offer of its matured asset to the public InvIT, that is IRB Infrastructure Fund. As of September 24, the enterprise value of offered asset is 15,000 crores as outlined in the independent valuers report of the private InvIT. The consideration so received will be used for the funding upcoming opportunity in the sector. The proposed transfer is key step to our BEST, that is Bid, Execute, Stabilize and Transfer strategy, under which the projects are initially developed under our private InvIT platform. Upon completion and stabilization, these assets are then offered to the public InvIT platform. This process not only maximizes the value for the stakeholder of IRB group, but also ensures the sustained long-term benefits. The base growth strategy focuses on sourcing the capital for growth through asset monetization. This transfer of the asset from the private InvIT to the public InvIT will ensure that there is no need to dilute the equity or alternatively raise the debt at IRB level. For the public InvIT, this is a win-win situation as not only their portfolio expands, but also the residual life of the asset under the management will get enhanced. During the quarter, private InvIT has acquired 80.4% equity of share capital and 84.4% of the debenture of the Ganga Expressway project in line with the concession agreement. The project has already received 3 tranches of grant, that is 8.7 billion out of 17.46 billion from UPETA. We are happy to inform that the project is progressing as per the scheduled timeline. Investment manager of the private InvIT on behalf of the trust has issued and allotted 5.84 crores unit of the trust aggregating to 1,714 crores, and the company being a sponsor of the trust has been allocated 2.98 crores unit. We have witnessed a robust growth in the toll revenue, 21% across in private InvIT and Mumbai, Pune and Ahmedabad, Vadodara put together on year-on-year basis for Q3 FY25. The private InvIT has been generating positive cash flow since last financial year and has declared a distribution of 54 crores in Q3 of FY25, which will reflect IRB's cash flow to the extent of its holding 51%. Cumulative distribution declared by the private InvIT for 9 months FY25 aggregates to rupees 190 crores. In line with our dividend policy, the company has declared an interim dividend of 10%, amounting to approximately 60 crores. Total dividend for 9 months FY25 aggregates to rupees 181 crores. Our total order book now stands at 31,500 crores, with the EPC order book at approximately 3,200 crores. Next 2 years executable order book including O&M and EPC is close to 6,000 crores. With respect to new bidding, the government push for the PPP project is gaining momentum with bidding for BOT and TOT project is now underway. We are well positioned to capitalize on these opportunities and intend to actively participate in upcoming projects. India Rating has affirmed the rating of IRB. Now I will request Sri Tushar to present the financial highlight for Q3 FY25. Over to you, Tushar.
Yeah. Thank you, sir, and good morning to all. I will first take you on the new accounting segment reported by the company for this quarter, followed by the financial highlights for the quarter. So, to align the accounting treatment in line with the regulatory changes relating to InvIT operations, shifting business environments, and emerging business opportunities, the company has engaged experts to advise on the accounting approach to be adopted by IRB. Following an extensive study of IRB's business model and Indian and global accounting guidelines, the experts have recommended the accounting treatment. This treatment was considered and approved by the audit committee and board after detailed deliberations. Accordingly, the company has introduced a new segment, InvIT and related assets, and reported the segment results in accordance with Ind AS 108. As you are aware of that more than 85% of enterprise value is attributable to its asset business for IRB. Notably, the private InvIT has an enterprise value of approximately 60,000 crores, in which IRB holds 51% stake. Now, with adoption of new measurement approach, the investments in private InvIT will reflect the inherent value of these investments on an ongoing basis. I will now take you through the financial analysis for Q3 FY25 versus Q3 FY24. The total consolidated income for Q3 FY25 has increased to rupees 2,090 crores from rupees 2,077 crores, registering a growth of 1%. The income from BOT segment for Q3 FY25 have increased to rupees 648 crores from rupees 616 crores, registering a growth of 5%. The income from InvIT and related asset segment for Q3 FY25 have increased to rupees 245 crores from rupees 267 crores, registering a growth of 267%. The income from construction segment for Q3 FY25 have decreased to rupees 1,133 crores from rupees 1,353 crores, down by 16%. The other income for Q3 FY25 have increased to rupees 64 crores from rupees 42 crores, an increase of 52%. EBITDA for Q3 FY25 increased to rupees 1,049 crores from rupees 978 crores, registering a growth of 7%. Interest cost is increased to rupees 461 crores as against 433 crores, an increase of 7%. Depreciation cost increased to rupees 265 crores in Q3 FY25 from rupees 251 crores, an increase of 5%. PBT has increased to rupees 323 crores in Q3 FY25 from rupees 294 crores, an increase of 10%. PAT before exceptional gain and post JV losses has increased to rupees 222 crores in Q3 FY25 from profit of 187 crores considering the JV loss for Q3 FY24 of rupees 51 crores in Q3 FY24, an increase of 18%. Now I request the moderator to open the session for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Alok Devra from Motilal Oswal Financial Services. Please go ahead.
Hi, good morning. Just had a couple of questions. First is on the order inflow. So if you could just highlight what is happening on the NHI side, because the order inflow has been pretty poor YTD. It's although it's picked up in the third quarter, but still, on the overall basis, it seems pretty weak. And now we are just left with 2 months. So if you could just highlight on the total order inflow as well as what kind of projects are expected, because even toll projects have not really come by.
So, morning, Alok, Maestro this side. As you know, the year opened for us with the 2 TOTs that we had bagged starting from 1st of April. And as all of us are aware, due to the election getting conducted, the ordering and the overall activity had slackened. But we see positive momentum coming back. Few of the TOT and BOT bids have already happened. And we see a good traction over the next 2 months as far as TOT and BOT space is concerned. We are fully geared up to participate in these upcoming opportunities, and we will be working very, very closely on these opportunities to see what best we can get in for the company prospects.
Sure. So based on what has happened, I'm sure it has been below our expectation also that, last time when we spoke in the earning call, post that also 2 months, nothing has really materialized in a concrete way. So have we trimmed down our expectations for the, remaining 2 months? Because this is when the most of the ordering was expected in the last 4 months, and 2 months have already gone by.
So, Alok, on a lighter version, India has won many matches on the last over.
Yeah.
So we have not filled our target as yet.
Sure.
We stay tuned with the same target number even now.
Absolutely. And after this, the reclassification exercise which we have done, so now the recurring number will be the gain from InvIT and everything will be counted in the revenue part. So the classification would look like this only, right? How it's given in the P&L. And just that the 58 billion of one-time this thing will go away from next quarter onwards.
Yes, Alok, you are correct. This will be a recurring nature.
Sure. Just one last question. Why is this gain included in revenue? Isn't it part of the, non-operating or the non-core revenue? Because then it actually does not give a true picture of the core revenue, right? Because this is coming from the InvIT operations, So
Alok, as you are aware that InvIT investment, typically InvIT works on the NDCF, and where the cash flow generated from InvIT gets distributed to the unit holder. And the present accounting system where whatever the distribution we were getting were not reflecting in the P&L account. That was not reflecting in P&L account. Secondly, as these assets has a long life, as basically we will go closer to the cash flow as the revenue increases and the cash flow increases, the value of these assets will increase. So in fact, if you look at your own the analyst model which do the DCF, as basically you roll forward by 1 year, there is an appreciation in the value and accordingly the target price also increases. So I think with respect to in terms of monetization, we have already offered 5 assets to the public InvIT. So we are monetizing also. That will be on timely basis. There will be a realization of the numbers also. So I think considering that this should be treated recurring nature and this should be treated form of regular income, and this is in line with the accounting standard and accounting norms in India or globally.
Yeah. So Alok, just to add here, if you see for IRB now, as such, strategically now the bidding is happening at the trust level, and for IRB it's like a regular investment and it will be a regular phenomena where IRB will deploy its capital against its stake. So for IRB, it's a major operational segment, because now all the biddings which we are looking for is to come at the private InvIT level. So that leads to us for treating it as an operational segment going forward.
One thing more to reflect upon, because your question was why equity PL and why not OCI? So I think the point here is that the toll revenues reflect at the private InvIT end, and that keeps giving the investors a visibility about how the portfolio is actually performing. But the reflection of that, of gaining cash flows, doesn't get reflected into IRB balance sheet in spite of owning 51% because of a joint control mechanism that exists in the private InvIT. And that reflection not getting captured in IRB, it gives a little truncated picture of the scheme of things for the investors. So it was thought appropriate to move it through P&L and not as an OCI treatment.
Got it. I think that's very helpful, and all the best for future. Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Vishal Periwal from Antique Stock Broking. Please go ahead.
Yeah. Yes, sir. Thanks for the opportunity. Two questions from me. First, in the P&L, in the revenue, when we have booked the dividend interest income from InvIT of 167 crore, how does this differ from the PPT where we have mentioned distribution of 540 odd million? Are the same thing or are they different?
No, so it's 167 is the distribution which includes the distribution from private InvIT and public InvIT.
Okay. No, but then quarter 3 in the PPT mentioned 540 odd million. So roughly like 51% of it will be like almost like 27, 28 odd crore vis-a-vis the 16, 17 crore that we have booked.
Vishal, I think based on the revised accounting standard, whether dividend or distribution from the InvIT are accounted only on receipt basis. So whatever is declared in Q3 will be get accounted in next quarter. This was the distribution. What is reflecting is of distribution of the last quarter.
Okay, got it. And then the second is on this the treatment of the investment that we have done for the InvIT. According to you, how this will have an impact on ROEs and I think margins may be largely same, EBITDA margin, but ROEs, will this have a positive impact? Is that fair to understand?
Yes, to begin with, it will have positive impact on the ROE. But however, for our business, typically people don't look at ROE or return on capital employed. Our business is largely have a 80-85% value coming from the asset, where people do the DCF, and for EPC business, they give the multiple. So our business is not evaluated or valued on the basis of ROE. But you are absolutely correct. There will be improvement in ROE.
Okay. Sure, sir. Yeah, that's all from my side, sir. Thank you very much, sir.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Yes, sir. Hi. Yes, my question is on the monetization part which we are taking from private to public. So, are we now in a position where this will become a more regular phenomena? Because first these 5 assets, whatever time it takes, I think you've given a timeline of first half of FY26. So, do you think that on a periodic basis, each financial year from here on, we can see more assets coming in and getting monetized to this route?
So, Parikshit, morning. This is a more strategic thought process that we have gotten into. And you are right that this will be an ongoing phenomena because the way we have built the business and the way we have created the structure of private InvIT acting as a development platform and also owning the public InvIT, which is majorly housing all the matured assets. I think this becomes the perfect fit where, based on the risk allocation of the project, the value unlocking keeps happening. So while at the IRB end, we are capturing the executional risks and reaping the benefits on the construction and O&M margins, and ending up owning investments in both these platforms, which will now reflect basis the treatment that we talked about earlier. The unlocking of value will continue to happen where matured assets we can always offer to the public InvIT, where this platform also gets fresh air to start growing rapidly. And this will unlock the capital for private InvIT, which then can go in faster deployment for upcoming new assets. And I think the focus going forward, even from the Government of India, is likely to be on asset monetization. And that will be a huge opportunity opening up for the sector, where we intend to keep our leadership situation. And to undertake large number of assets, this unlocking will help us to catapult into a much faster growth of asset base without adding up or piling up too much of debt, and efficiently using the unlocked capital and distributing the risk across the portfolio.
So what kind of annual inflows or monetization potential do you think on a near to mid-term can it generate for you, which can come in as a growth capital for your guilty and other assets?
So let's look at it this way, that the first tranche of assets that has already been offered to public InvIT is having an enterprise value of around 15,000 crores. If I net out the debt of around 7,500 crores, we are talking here of a significant equity unlocking that will come way to the private InvIT. Now, let's make a simple math here, that 8,000 crores plus of equity unlocking, say, happens at private InvIT end, where IRB owns 51%, then that equity capital can be deployed for another 25,000 crores worth of projects, which the private InvIT can bid for. And this will be a significant capacity that we will be creating for IRB to participate in the upcoming opportunities. I am just talking about the first tranche here. Let's remember that the total enterprise value of the private InvIT today stands at 60,000 crores plus.
Okay, so you're saying the debt on this 15,000 crores is about 11,500. So you have...
No, I said the debt is around 7,000.
7,000. Okay, sorry.
Yes. Out of the 15,000 crore EV, the debt is around 7,000, and balance is equity unlocking that will happen.
Oh, 8,000 is bigger. So, but looking at the current market cap of public InvIT, so do you think there is appetite and that kind of resources? So how do you intend to do this?
So naturally, public InvIT is right now in the grip of things, and certainly if that fund has to grow, it has certain amount of legroom on the debt side, and the balance capital also can be looked upon by the public InvIT to acquire assets, because for any such platform to grow, if we look across any other InvIT, they have significantly grown by adding a mix of capital and debt. And I think that is the way forward that even public InvIT will involve itself on.
Okay. And will the sponsor get diluted here on the public InvIT side, because you as a sponsor, will you be...
No, I think we stand committed to support the public InvIT platform, in which we very much believe, and we will continue with our present exposure that we have as a sponsor.
And the intent on current IRRs which public InvIT is giving, and when you bring in assets, it has to be at a positive IRR. So how is your thought there? What could be the numbers look like?
I think it will not be very fair on my part to talk on behalf of the public InvIT, but the simple math suggests that with long-dated assets getting added to the public InvIT platform, the IRRs ought to improve from what they exist today.
Okay. And sir, on the BOT side, we have been hearing the bid getting postponed. I think multiple times that has happened, like Gwalior and other bids. So when do you think, why is it happening, and do you really think that this year we will see the light at the end of the tunnel in terms of bids happening? As I hear that these are really large bids, like 4,000, 7,000 crores in that ballpark size. So do you think that they'll see the light of this?
So I think you have answered the question yourself, that these are large size bids and they are serious numbers. So you will appreciate that the sector here has consolidated, and it's serious players who are looking at bidding on these large ventures. And I think I would like to appreciate NHI here that rather than rushing through on bidding half-cooked projects, they are keen to answer all the queries that are being put across to them in a very, very scientific manner. Yes, that's taking time, but I think that will avoid a lot of accidents in future with all these bids getting properly evaluated and bid upon. So while the anxiety level can be understood that it's getting delayed, I am actually more happy that a more thought-through approach is being adopted, all right reasons are being provided to the bidding community, and post that the bid is taking place. So any freak bid or any accident happening, ending up in the project getting stuck at a later stage can be avoided by this kind of a studied approach. And I would like to appreciate the effort of NHI here.
Okay. Sure, sir. Those were my questions. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Yeah, I think everybody is equally keen to go back to the TV screens and watch what the budget has to offer. So I would not like to take the time of all the community that we have here. And thank you everyone for taking time out and coming for this call on a Saturday morning. And look forward to engage with you again soon over the next quarter. Thank you everyone and have a great weekend.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. We thank you for your participation. You may please disconnect your lines now. Thank you and have a great day ahead.